Welcome, G3 investors. We're going to take a look at the first quarter ended March 31st, 2023. Well, tech stocks ruled the market this year. The NASDAQ gained 16.8% through March 31st, the first quarter. The NASDAQ took out its first level of resistance here at 11,600 and was trading just below its second level of resistance at 12,270 on the blue line here. And that is a gain of 6.7% for the month of March and 16.8%. And this little move right here means that the uptrend has resumed. If we take a look at the S&P 500, we can see that it closed just above its resistance, its first level resistance at 4,100 here at 4,109. That's a 7% gain year to date, 3.5% in March. And its next level resistance is at 4,200. Take a look at the Russell 2000, and we can see it's in much worse shape. The Russell is still in bear market territory, trading below its 200-day moving average here at 1822. Now, if we take I just want to spend a little bit of time on our model. Let's see how we've done. Well, we are crushing the market as usual. We're up 22% for the month of March, over 55% year to date, and we are besting our benchmark S&P by 48 percentage points, and we're better than a NASDAQ by almost 39%. If you're interested in getting gains, outsized gains like we are, just click that into your browser and sign up as a G3 patron. It only costs $20 a month. It's a bargain of the century. All right, let's go back to the market. Let's take a look under the hood. So the strongest ETFs were in the technology arena. There's the semiconductors. You can see it's very strong. Nice move here. Definitely in an uptrend. There's the technology select sector. It's moving along nicely. The industrials. I'm going to go a little bit fast here, but you can always pause your video and look, but you can see that it started to break above resistance here. HHB, let's see. I think that's the home builders. Looking pretty good. They're trading, finally broke above their 50-day and the 200-day on that one. We've got to look at the Qs. That's the NASDAQ 100. Nice breakout there. IWF, that is the Russell 1000. Nice breakout there. ITA, I believe, that's aerospace and defense. Got a little bit of trouble here, but broke right back above this 50-day blue line here was acting as resistance, so it broke above that. And in high-O silver, these are the ones I consider strong. Silver has been on a tear since it broke above its 200-day back here at about the first week of the month. Okay, so we've got some that are in no man's land, by my way of thinking. Here's the energy select sector, and you can see it's just trading above its 200-day moving average. So looks like it could go either way at this point in time. XLY, consumer discretionary, just above its 200-day moving average. XLB, materials sector, just broke out. It's in a little bit better shape, but it's still under its 50-day moving average here, and it needs to get up above 84 to get me excited. Let's see, XME, metals and mining. Yeah, started above its 200-day, but it's just kind of, and then here's the SPY, and it just, just as we went over the S&P 500, it just broke above resistance, which is 403 here, and it still has a ways to go to break this second level, which is at 420. So it's still in kind of iffy. Don't know. We've got the earnings reports coming out, so that should be interesting. Here's the mid cap 400 growth. It's not a big ETF, but again, it looks very similar to the SPY. And then last but not least, for the ones that are iffy, is the transports. Here we are. We've broken above the 20-day, but we're still here, and we still got a ways to go to get this one moving. Now, for the weakest, XLF. Well, there's weakness. That's what a weak one looks like. That's the financial sector, and of course that was influenced, even though we don't trade the regional banks, but it was influenced by the regional bank, which I believe is KRE or something like that. Let me see if I'm right. Yeah, there's the regional bank. There's an ETF you don't want to be in. Glad we don't trade that one. On the long side. Okay, so there's XLV, and that's healthcare. And amazingly, that's looking pretty weak. Still trading below its 200-day moving average. There's the retail sales, Spider, and it's not looking too strong either. IYR is real estate. Not looking very good. IWM, we don't trade it, but this is what the Russell looks like. That's a very weak ETF. And then USO, oil and gas prices in the doldrums. And of course, UNG, about as ugly as you can get. Well, that's how the ETFs look. Let's take a look at the heat map. This is a year-to-date look at the S&P 500, and you can see that what I used to refer to as the Fang Man, Facebook, which is now Meta or whatever, Apple, you have all these, the big glams. There's Tesla, well, there's Meta up 76%, Tesla 68%, and NVIDIA, the semiconductors are absolutely on fire. Software is doing real good. And then there's Apple, Amazon, and Microsoft to round out the big boys. So it's looking pretty good. Now the question for me is, let's look at the forward PE of these big boys. So we've got some very high PE ratios here. This is the forward PE. So this is getting from their guidance. So there is a lot of red on the screen. And that means one thing to me, that these guys got to really perform. And we're going to find out, because next week starts the earning reports for the first quarter of this year. And so we'll look and see if these tech giants deserve their bloated forward PE ratios. I'm Greg Gallagher. Good luck and good trading.